Hey everyone, welcome back to Corporate Decoder, the place where we look at company filings and try to understand what's really going on. And today we are going to talk about the latest 8K from Laser Photonics, and it looks like they just took out a big loan. Let's dive in and see what that means for the company. Laser Photonics Corporation filed a report with the Securities and Exchange Commission, basically the government agency that oversees companies and stock markets. On February 21st, 2025, this report is called an 8K, which companies file when there's a major event that investors should know about. The important date to keep in mind is February 14th, 2025, because that is the day this important event happened. This is basically a current report, meaning that it tells us what's happening now, not what happened in the past, like with quarterly or yearly reports. The company we are looking at today is Laser Photonics Corporation. They are registered in Delaware and their file number is 001-41515. Just a detail in case anyone wants to look them up. Their phone number is 407-804-1000 in case anyone wants to give them a ring. There's a section about whether this filing is meant to cover other types of communications, but those boxes are all unchecked, so we will just ignore them. Laser Photonics has their common stock listed on the Nasdaq stock market under the ticker symbol LASE, that is their symbol. The company is flagged as an emerging growth company and has elected to use extended transition periods for accounting standards compliance. This basically means they have more time to comply with new rules. Now we get to the heart of the matter. Laser Photonics entered into what is called a business loan and security agreement. Basically, they took out a loan. On February 14th, 2025, Laser Photonics, which we will just refer to as the company, got into a business loan agreement with Agile Capital Funding and Agile Lending. These two companies are the ones giving them the money. The actual date of the agreement was February 13th, 2025. Control Microsystems Florida LLC, which is a subsidiary of Laser Photonics, is also part of this agreement. Under this agreement, Laser Photonics is getting a loan of $1,050,000, which is a little over $1 million, but here's the catch: they'll have to pay a total interest of $512,000. Interest is the cost of borrowing money, and that is quite a big amount. The company needs to pay back the loan in weekly payments of $54,000. These payments start on February 24th, 2025 and end on September 1st, 2025, which is a little more than 6 months. Laser Photonics also had to pay $50,000 to Agile Capital as a fee for handling the loan. Here's something else to keep in mind. The loan is secured by a blanket lien on all of Laser Photonics' assets. This means that if the company cannot pay back the loan, Agile Capital can take their assets. If Laser Photonics wants to pay off the loan early, they'll have to pay a prepayment fee. This fee is equal to all the interest they would have paid if they had kept the loan until the end, which is around 28 weeks from when the loan started. The full agreement is available as Exhibit 10.1 in this report if you feel like reading it. The report also lists the exhibits, which are extra documents related to the filing. And lastly, the report is signed by Wayne Tupola, who is the president and CEO of Laser Photonics Corporation. Now, let's step back and analyze what this all means. Laser Photonics is clearly in need of cash, as they have taken out a significant loan with a relatively high interest rate. The fact that they put all of their assets as collateral as security suggests they may have had difficulty getting a loan on better terms. This move can be both a positive and a negative for the company. On one hand, it gives them immediate capital to execute their plans for growth. On the other hand, the burden of repaying this loan plus the interest might put a strain on their financials. We need to look at their previous reports to compare. We do not know what the previous financials are for Laser Photonics to make an opinion of the valuation, however. Considering the information available, the high cost of the loan, the short repayment period, and the blanket lien on the company's assets, my view is cautiously bearish. The company is betting big on their future growth, and while it could pay off, there is also a significant risk they may not be able to meet these obligations. We do not know how much cash the company has on hand, and the reason for the loan. If the company doesn't have a good reason to take a high interest loan, it is not a good sign. I would need to know how much cash they have on hand. So, what does this mean for the stock price? Without knowing a range of valuations, I am going to say if it were me, I would want the stock price to be between $1 and $2. Thanks for watching, and as always, please like, comment, and subscribe for more in-depth analyses of corporate filings. We'll see you in the next video.